It's incredible how one single event in one part of the world can send these huge shockwaves through the entire global economy. Today, we're going to break down how one missile strike is doing exactly that, hitting everything from the price of gas to the value of your own portfolio. So, let's dive in. And this quote, well, it really says it all. It is a regional war. That's how analysts are describing the situation now. It's a massive shift in thinking, and it all escalated because of one single pivotal moment. And there it is. This is the headline that sent the markets into a total tailspin. Right when it looked like this six-day-old conflict might actually be calming down, Iran confirmed it. A direct missile strike on a U.S.-flagged oil tanker. So what exactly went down? Okay, so to really get why the markets freaked out, you have to look at the attack itself. This wasn't some kind of accident or a stray shot. No, this was a calculated move, and it represents a huge escalation in this conflict. I mean, the scale of this is just staggering. Iran's Revolutionary Guards didn't just confirm the hit, they were practically celebrating it. This is the first direct strike on a U.S.-flagged ship in this whole thing. And get this. It wasn't an isolated incident. At the same time, Iran unleashed its biggest ever missile and drone attack on Qatar and the UAE. They just pulled the entire Gulf region right into the crossfire. So you've got a major oil tanker literally on fire in one of the most critical shipping lanes on the planet. The first and most obvious reaction from the markets, an immediate shock to the price of oil. 8%. Just let that sink in. That's how much the price of West Texas Intermediate crude oil jumped in a single day. That is a massive move, and it sent this clear signal of pure anxiety ripping through the energy markets. And to put that into perspective for you, that 8% surge brought the price to $81 a barrel. That is a full 14% higher than it was just 6 days ago, before all of this started. What this tells you is that the market is bracing for a serious and maybe even a long-term hit to the oil supply. And of course, those higher oil prices, they created immediate knock-on effects, and they were brutal. Just look at the airlines. For them, every single dollar added to the price of oil is a direct hit to their profits. The major carriers just got hammered, with stocks for United and Delta plunging more than 5%. So this all leads to the one question that's probably keeping traders up at night. Could we see $150 oil? According to analysts at Wood Mackenzie, this is no longer some kind of crazy black swan scenario. They're saying if these attacks continue and that crucial Strait of Hormuz gets shut down, yeah, $150 oil is now being talked about as a very real possibility. And this wasn't just an oil story, not by a long shot. That shockwave of fear, it rippled out and slammed into the broader stock markets. You can see the damage on Thursday was pretty widespread. The S&P 500 and the Nasdaq saw some modest losses, sure, but the Dow Jones, which is really a barometer for the whole economy, it dropped over 1.6%. But honestly, even these numbers don't really tell the full story of what was going on just beneath the surface. But here's where it gets really interesting. The market was completely split. On one side, you had companies that are really sensitive to economic growth and fuel costs. Think about industrial giants like Boeing and Caterpillar. They got hit hard. But on the other side, defense contractors and energy companies, their stocks actually went up. It's a classic wartime market rotation, with investors betting on more military spending and, of course, higher energy prices. So, with stocks getting hammered, what do investors do? They run for cover. They look for a flight to safety. And this time, that search for safety benefited two very different assets. One is ancient, and the other is very modern. And look at gold. It shot up, briefly touching the $5,400 mark on Thursday. That's its highest level in a month, and it's a clear signal that investors are running back to traditional safe haven assets. And if you look at the timeline here, you can see this isn't happening in a vacuum. After hitting its all-time high of nearly $5,600 back in late January, it kind of cooled off. This latest jump shows it's making another serious run toward that peak. Okay, but this is where it gets really fascinating. While everyone is piling into the traditional safety of gold, Bitcoin is sort of carving out a new identity for itself. Even with all this fear in the market, what traders call a risk-off environment, it's holding strong above $70,000. Analysts are calling it unusual resilience. It really seems like the big institutional investors, we're talking hedge funds and asset managers, are now treating every little dip as a chance to buy, looking at it as a new kind of digital gold. So, after a day of total chaos, the big question on everyone's mind is what happens now? Well, there are several huge events coming up that could really move the markets as we head into the weekend. All right, so heading into Friday, there are three key things you absolutely need to be watching. First up, the U.S. jobs report. Any other week, this would be the biggest story. If the number is weak, it could put even more pressure on stocks. Second, and this is the big one, is the U.S. military response. Any kind of direct retaliation could easily send oil spiking another 5 to 10%. And finally, watch the traders themselves right before the closing bell. Nobody, and I mean nobody, wants to hold a risky bet over a weekend when literally anything could happen. And, all of this is just a stark reminder of how fast the entire global picture can change. It leaves every single investor out there with one critical question. When a single geopolitical spark can set the entire market on fire, is there any place that's truly safe to hide?